So the first one is summary of significant accounting policies. How does the company, for example, what's their revenue recognition policy? What inventory methods do they use? That's important. If I want to compare this company to that company and they're using different inventory methods, I got to be a little more careful. What methods do they use? What assumptions do they make about the useful life of their buildings and their machinery? Again, when it comes to estimates, I want to know the assumptions they're making so that I can compare their performance with another company's performance in the same industry. Now, we asked the question earlier, how does Disney account for their film and television production costs? Turns out in the notes to the financial statements, Disney goes to great detail to tell us exactly how they do that. I'll just read a little from some of their disclosure. Film and television production, participation, and residual costs are expensed over the expected product life cycle based on the ratio of the current period's revenues to estimated remaining total revenues for each production. Then they go on to say, here's how we do it for the cost of television broadcast rights for acquired series, movies, and other programs. They go into great deal to tell you the assumptions that they make. Again, we need to understand the assumptions that are made so that we can interpret the numbers that are in the financial statements. When it comes to accounting policies, companies are very specific in telling us exactly the assumptions that they make. In addition, companies provide additional information. The three financial statements contain summary totals, but there's more information we need to know. For example, here's on the financial statements, you'll see here's inventory, but in the footnotes or the notes of the financial statements, they'll tell you, and that inventory is broken down into three parts, for example. Some of it is raw materials. Nothing's been done to it yet. Some of our inventory we're still working on. That's work in process. And some of our inventory is finished and we haven't sold it yet. So in the notes of the financial statements, you'll see the status of, in this case, inventory. How much is raw materials, how much is work in process, and how much is finished goods. Receivables, we said earlier, Bank of America has loans receivable of $947 billion. Of that amount, they tell us in the notes, $9.6 billion they don't expect to ever collect. So they've got $947 billion outstanding. They don't expect to ever see $9.6 billion of that. That's important information. We're not going to collect all of this. They tell us that in the footnotes. Toys R Us. How much do they earn during the quarter that includes Christmas? Well, it turns out we can go to the notes and find out about 40% of this sales figure is earned during the holiday season. That's important to know because Toys R Us, for example, is highly seasonal. Companies will typically provide quarterly data so that you can see if they're a seasonal business or not. That quarterly information disclosed in the footnotes.